This is going to be a fun little exercise. If your business operated like a candy factory, what would it look like? And I'm going to give you some actual visuals here to go by. Oh, let me silence my phone first. There, we don't need an interruption. Okay. And it's not because bookkeeping is sweet, clearly, because it definitely isn't. But because a candy factory cannot rely on memory, assumptions, or one person running around trying to hold everything together. It requires a system. Ingredients come in, work moves through a series of stations, and each station has a specific purpose. And when every station does its job, a consistent product comes out the other end. That's exactly how a strong business should operate. And for bookkeepers especially, I want you to understand something before we even enter our little factory. This is not only about building systems for your business. This is about building systems for every single client. This is about learning how to reorganize, recognize, strengthen, and build systems for your clients. Because understanding how business actually operates is key to advisory. This is how you move beyond recording what already happened and begin helping clients improve what happens next. This is your future, and this is where your value is. And this is where the money is in bookkeeping right now. So we're going to be very meticulous here. Okay. Now, every station I show you today applies twice. First to your business and then to every client business you serve. Inside Maven Systems, we have 10 essential standard operating procedure applications, and I want you to think of them as 10 stations inside your operating system. And here's the important part. Every viable SOP must stop at every station, even if it seems irrelevant. You may only need to add a sentence or a single decision line at some stations, but you still have to stop and ask the questions that are pertinent there to make sure you can eliminate them. If your process skips a station, the missing piece will eventually show up as confusion, delays, dropped responsibilities, frustrated clients, team mistakes, or work that cannot grow beyond you. So let's enter the factory. All right, station 1 is role. The first station determines the role of the process. Why does the process even exist? What business outcome is it supposed to produce? Where does it begin? Where does it end? And where does it fit in the larger operation? For example, the role of a monthly bookkeeping process is not simply to do the books. It might be to collect and verify the financial activity for the period, complete the agreed upon bookkeeping work, identify unresolved issues, and deliver accurate financial reports by a defined date. That's an actual role. The role also establishes the correct order, the right people, and the appropriate handoffs. Without it, people may complete individual tasks without understanding the outcome that they're supposed to protect. A pile of completed tasks is not necessarily a successful process. Station 1 makes sure the entire line is pointed toward the correct outcome. And speaking of the right people, what is your role? Well, your role is to control the workflow, not to master every task. All right, station 2, expectations. This is where we define what done looks like. What should the finished product actually look like? And when we do standard operating procedures, we're going to include a visual copy of that finished product. So what is the required standard? It has to be established. What must be accurate, complete, approved, documented, or delivered before we can call it finished? Reconcile the bank account is an instruction. Reconcile the bank account through the statement ending date, investigate all differences, look at variations, document outstanding items, and confirm that the reconciliation difference is 0. That is an expectation. Expectations must be defined before the work begins. Your employees should know what you expect. Your clients should know what they can expect. Your vendors should understand what you require from them. And you need to know what standard you are promising to uphold. Otherwise, everyone's working from a different definition of done. Clear expectations create consistent results because they eliminate the guesswork before it enters the process. And we talk about consistency being the main leader into credibility, okay? That's the whole purpose of systems is consistency. All right, station 3 is intake. No recipe works without the right ingredients. At station 3, we're going to identify everything in the process that's required before the work can begin to move forward. That might include bank statements, payroll reports, sales reports, receipts, loan documents, answers from the clients, access credentials to grab these on your own, prior period balances, approvals, or information supplied by another member of the team. But intake isn't merely a list of what you need. The SOP must also explain who supplies each item, how it's submitted, where is it stored, when is it due, how do we determine whether it's complete, and what happens if something's missing. If the client sends 4 of the 5 required statements, the intake is not complete. If a team member receives a document but saves it in the wrong place, the intake is not complete. If information is buried in a text message that no one else can access, the intake is not complete. Incomplete inputs stop the production. A good intake system protects the rest of the process before the work ever reaches the station. Okay, this is akin to forgetting the sugar in our candy factory. Okay, we cannot start the process without the sugar. All right, station 4 is timing. And this is a weird one. People forget all about this one for some reason, but it's very integral to your system because every step has to get its moment, its moment to shine. When does the process begin? When is each input due? How long should each stage take? Which tasks have to happen in sequence? Which tasks can happen simultaneously? What's the final deadline? And what timing event triggers the next step? Suppose client documents are due by the 5th. Bookkeeping begins on the 6th. Questions are sent by the 10th. Responses are due by the 12th. And review happens by the 15th. And then reports are delivered by the 20th. That's a timed process. Doing the bookkeeping every month is not. Timing also has to be realistic. You can't promise reports by the 10th if the client's allowed to provide the information on the 15th. The client's timing, the employee's timing, and the vendor's timing, they all have to dovetail with each other, all right? Otherwise, one person's delay becomes someone else's emergency. So station 4 turns vague intentions into an actual operating schedule. Station 5, this one is critical. Boundaries. This is one of my absolute favorites because this is where we install the red lines, which here you can see we're representing with red licorice. All right. Every business process needs boundaries for clients, for employees, for vendors, and even for you as the business owner or for your clients as the business owner. Client boundaries might include how and when documents have to be submitted, which communication channels we use, when questions have to be answered, what work is included in the engagement, what requires additional charges, and what happens when the client misses a deadline. Employee boundaries might include which decisions they're actually authorized to make, and that's huge. Which tasks they may complete without approval, how client information has to be handled, where the work is to be documented, when they have to stop and escalate an issue, and what they may never promise to a client. That's huge right there, what they're never allowed to say. And the vendor boundaries might address things like what information a vendor can access, who can authorize purchases or changes, required turnaround times, acceptable communication methods, data security requirements, and what happens if the vendor does not deliver as promised. These boundaries all work together. You cannot tell an employee what reports are due on the 15th while allowing a client to submit records whenever they feel like it. You can't hold your team responsible for a deadline that depends on a vendor with no stated delivery requirement. And you can't promise a client unlimited access while expecting your employees to maintain a controlled workload. The client boundary determines what the client has to contribute. The vendor boundary determines what the outside provider must deliver, and the employee boundary determines how your team handles the work. Together, they protect the process, the people, and the final result. A boundary is not punishment. It's an operating rule that allows everyone to know where the red line is before anyone crosses it. Station 6. Escalation. This is another absolutely critical one because problems happen. Shit happens, as they say. The system doesn't fail merely because a problem occurs. The system fails when no one knows what to do about it. Escalation answers 3 questions. What condition requires attention? Who needs to be notified? And what happens next? Maybe an unreconciled difference under $25 can be researched and documented by the bookkeeper. A difference over $25 maybe goes to a review. A suspected duplicate payment, maybe it goes directly to the client for a response. And anything suggesting fraud, missing funds, or unauthorized activity should go directly to the business owner. That is an escalation path. It removes panic, hesitation, and improvisation. The person encountering the issue doesn't have to invent a solution. They identify the condition, follow the route, and notify the correct person. Every standard operating procedure needs an escalation point because every process can encounter an exception. A problem without a path becomes a bottleneck. A problem with a path becomes a manageable event. Station 7, responsibility. This is another critical one. This is where every task gets an owner, not a department, not the team, not whoever sees it first. One task, one owner, coupled together. The owner may perform the task, delegate part of it, or gather information from other people, but that one person remains responsible for making sure that that project or task reaches completion. For example, the client owns submitting the source documents. The bookkeeper owns completing the reconciliation. The reviewer owns approving the completed work. The practice owner owns communicating any significant advisory issue. When two people think the other person owns part of that task, nobody owns it. And when everybody owns it, nobody owns it either. Responsibility also includes confirmation of the handoff. That SOP should make clear when ownership transfers from one person to another and how the receiving person knows the task is now theirs. Station 7 makes sure that nothing gets dropped between the machines. Station 8, collaboration. Responsibility assigns individual ownership. Collaboration connects those individual contributions into one result. The client may provide the ingredients, the bookkeeper may assemble the financial information, a payroll company may provide the payroll data, a reviewer may verify the work, a CPA may ultimately use the completed records for tax prep. Separate contributions must follow one shared plan. The SOP should explain who communicates with whom, what information is shared, where is it shared, and what does each contributor need from the other. And how do we prevent separate people from duplicating work or from working with different information? Collaboration doesn't mean adding more meetings. It means creating deliberate connections between the people whose work affects the same outcome. The bookkeeping may be perfect, but if the client never answers the open questions, the result is still incomplete. The payroll records may be correct, but if they're never compared to the general ledger, the process is disconnected. Station 8 turns individual contributions into one consistent result. And this is where the advisory opportunity begins to become obvious. Once you can see how the client, employees, vendors, technology, information, and the deadlines all dovetail and work together, you're no longer looking at only transactions, you're looking at the whole business. And that's the difference between recording the numbers and helping the clients improve the systems that produced those numbers. Station 9, scale. Now we ask whether the process can produce the same result more than once, for more than one client, and with more than one person performing it. Can the process be repeated? Can it be taught? Can it be assigned to somebody else? Can the same framework be used across multiple clients without rebuilding it from scratch every single time? Scaling doesn't mean doing more work through brute force. It means repeating a process without multiplying the chaos. And the core system should remain consistent even when certain client details change. Every one of your clients may use a different general ledger platform. One may have a weekly payroll and another might have a biweekly payroll, and they might be on different platforms. There are variables within every process. They shouldn't require you to invent an entirely new operating system for every client. If the SOP only lives in your head, it cannot scale. It depends entirely on your memory, judgment, or personal presence at every single step, and it cannot scale. A scalable process identifies what's standard, what's customizable, and what must never change. This is how one proven process becomes many consistent results. And lastly, station 10, sustain. A system is not finished merely because it worked once. It has to keep working. At station 10, we review, refresh, and improve the process. Is it still producing the expected results? Are people actually following it? Has the software changed? Has a client requirement changed? Is a step no longer necessary? Has the team discovered a better method? Did an exception reveal a weakness in the process? Every sustainable SOP includes some form of review, and that might be an annual review date, a quarterly team check, a quality control measure, or a required update after a significant error or change. The purpose isn't to rewrite everything constantly, it's to protect what works and improve what no longer does. Outdated SOPs are dangerous because they create the appearance of a system without the protection of a functioning one. Station 10 keeps all the process relevant, usable, and dependable. So here are all 10 stations again. We have role, expectations, intake, timing, boundaries, escalation, responsibility, collaboration, scale, and sustain. These are not 10 unrelated business ideas. They're 10 connected applications inside one operating system. Role establishes why the process exists. Expectations define the required result. Intake gathers what is needed. Timing determines when everything happens. Boundaries protect the process. Escalation manages the exceptions. Responsibility gives every task an owner. Collaboration connects the contributors. Scale makes the process repeatable. And sustain keeps it working. Every SOP should make all 10 stops. If the process exists only in your head, it's not documented. And if it's not documented, it doesn't exist. And if it can't be consistently followed by another capable person, then it's not repeatable. If it skips essential stations, it is not a viable SOP. It may be then a habit or a checklist. It may be the way you've always done things, but it is not yet a complete operating system. So take one recurring process in your business and send it through the factory. Ask all 10 questions and find the station where the production starts breaking down. That's where you zero in. Learn to apply these 10 stations inside your own business first, and then you can learn to recognize them inside your clients. You are your own guinea pig here, because the future of bookkeeping isn't simply reporting what happened. It is understanding why it happened, recognizing where the system broke down, and helping the client build a better way forward. That is advisory, and that is your future. And that's where the greater value begins. Because when every station works together, you stop managing every isolated task and start controlling the flow of the business. So which station needs your attention first? Put the number in the comments. And remember, systems today, freedom tomorrow, and a stronger business always.